Hello everyone, welcome to Gold Weekly Analysis video. Now next week is going to be super important because if you look at the fundamentals, then we have really high impact news almost every single day of the week. So be careful if you want to trade gold because next week is going to be highly volatile. Now, before I start the next week's analysis, this is my free Telegram channel where I give market updates, intraday analysis for completely free. You can check this out. And last week, we were expecting a sell trade from here around 3315 after a break of structure in 1 hour time frame. And market exactly played out this move. You can see here, market went to this level, tapped this level, gave rejection, and also a structure shift in the lower time frame, which gave us this confirmation entry. And we took this trade with our members, and you can see this trade gave us our full targets. So if you also want free membership access, in that case, you can register yourself with Vantage Markets. The link is given in the description below. You just have to deposit $200 at least, take a trade and send me the screenshot, and I will give you our free membership access. Now let's come back and see what is the next expected move in gold. Now, if you have followed me for some time and if you have seen my last videos, you should know that we are expecting a higher degree third wave completion at 3500 level, and after that we were expecting a sizable correction which can take us to the zone of 3101 till 2655. So this was my analysis. I was looking for a correction, and that's what I have been following since then. Now, if we look at the microstructure over here, I think I've also discussed about the microstructure in my last video, but I will just like to update and add a little bit here because of the last price action that has developed over here, that what we can see next in gold based on Elliott wave analysis. Now, if we look at this structure over here and then this structure, remember what we are looking at is a fourth wave correction. And this fourth wave correction is expected to be a zigzag correction like this. That means you're expecting this kind of move over here. So this is the expected move that we are looking in gold. Now, if we see this correction, then this correction can actually be denoted as like this A, B, and C, where within A waves, we have 5 waves like this. Within B waves, we have 3 waves like this, and within C wave, which is the last wave, we have again 5 waves like this. And this C wave can actually be an extended wave, okay? Because this is the last wave before a reversal, and this reversal is usually very, very strong. This is when we see V-shaped recovery, that market dropped immensely, trapping sellers here, bringing more sellers, and then hunting their stop losses and giving us a V-shaped recovery. So this type of move can be seen when the C wave is highly extended, okay? And that kind of move can be expected in gold in the upcoming week. Now, if we look at the microstructure and try to identify these 5 waves within this wave A, what we can see is that we have first wave over here. This is also our second wave. This is our third wave, our fourth wave, and our fifth wave. So we can see that we have clear 5 waves over here. So we can mark this whole wave as A wave. And after that, what we want to see is B wave. And after that, what we want to see is C wave. And this C wave is going to complete our higher degree fourth wave. And after that, what we want to see is a reversal from these zones over here, which are our Fibonacci levels. And from here, we want to see a reversal, which will again give us a new all-time high in gold, which can take us to the levels of 3,800 or even higher, for 4,000 levels or even higher, because this is going to be our last wave, which is the fifth wave, and fifth wave tends to extend in metals, okay? So this fifth wave can extend and it can take us to around the zones of 4,000 level, which will be our major top for the next 10 years to come, okay? So that is my long-term analysis. Now talking about the microstructure here, as I've already told you, we have 5 waves over here, and that has given us our higher degree A wave for this fourth wave. And right now we are in this B wave. And if we look at this B wave, then what I want to see is 3 wave formation, as you can see. So if we look at this formation over here, what I can see is that this is our 1, 2, 3 waves. So this can be labeled as our wave W. This is our 1, 2, 3 waves. This can be wave labeled as wave X. And right now we're actually going up, and again we want to see 3 waves over here in this last wave of this wave P. So we have our first wave, we want to see another wave and another wave, which is going to complete our wave Y, which is then going to complete our higher degree wave B over here. And after that, we want to see 5 waves down from here, and that is going to complete our wave C, which is going to complete our higher degree wave 4, and then a new all-time high from here. So this is the analysis that I'm looking for in the next week, which can happen. Now, if we look for this wave Y, then this wave Y can actually potentially hunt the stop losses above this high over here, which is at 3370. So next week, the level of 3370 is going to be very crucial. We need to see market go up above this level, take liquidity, trap the buyers over here, take their stop losses, and then give us a downside rejection from there, and then we'll be looking to sell. Now, interestingly, what we have here is that if we put Fibonacci on this last wave, this walk, then we can see here that our 50 to 61% level also targets around this zone, which is just around above 3370. So next week, if we see a breakout, we're going to look for a rejection from this zone, and on a rejection and a market structure shift in lower time frame, we're going to look for sell from this zone, and initially we're going to target this low over here, which was the last Friday low around 3266, and after that, if market breaks this low, which was last week's low at 3260, then it is going to give us confirmation that we are right now going down to complete this wave C, and that our wave C has started. And this wave C can take us to the level of at least 3101, and below that we can also see the levels of 2854, and below that we have the level of 2655. So this is the thing that we are looking for next week. I am personally bearish in gold because of the Elliott wave structure, which is telling us that we still need to go downside before we can see another high in gold. So even if market breaks this level of 3370 next week, we are not going to buy here. We are going to look for a sell from this zone where we have liquidity above this high, and along with that we have our major level of Fibonacci, which is from 50 to 61%, 3380 to 3408. This is going to be our major rejection zone. If we see market reject from this level and we see a structure shift in lower time frame, we are going to look for sell. And this trade obviously will be shared with my members. So if you want to join membership, you can join with Vantage Markets, or if you want to take paid membership, in that case, you can contact me. Okay, so that's the analysis for the next week. I hope it was very clear. If you still have any queries, you can ask in the comments. See you next week in a new video. Till then, take care and trade safe.